Welcome to the working on the financial statement analysis project for Chapter 5. So get your spreadsheet open. You'll also want to open up the assignment. So again, go to the class website, to the financial statement analysis project. You can click on the accounting concepts project. And we're going to roll down to Chapter 5. So Chapter 5, we have 6 individual requirements. So we're going to go over to our spreadsheet. Let's add a new sheet for Chapter 5. We're going to move it behind Chapter 4. And then we're going to go back to our project sheet and copy the first requirement down. And I'm going to paste that. I'm going to put the number 1 in front. And I'm going to make this a little bigger so I can see the whole question, and I'm going to go ahead and wrap my text. For some reason that ended up on a separate line, so I'm going to cut and paste that so that it's all in one spot. Okay, so the first requirement is describe the types of inventory held by the company. So if your company does not have inventory on the balance sheet, there are many of these that you will not be able to do. So you just need to put on your assignment, not applicable. I'll be able to tell whether that was the case. So let's go back to my balance sheet. And you notice that my company does have inventories, but of course they're not described here. So what I'm going to do is I'm going to go to the financial statements. So I'm going to drop these down, open up my financial statements. Okay, and this is 2020. I think this is the year ending 2021, January. And I am going to just do a command or control search, control F for inventories. You can notice that inventories are mentioned 19 times. So I'm looking for what types of inventories. So this is describing inventory, so I'm not going to look at that right now. This is cash by inventories. Current assets include inventories, but it really doesn't tell me what types. So I'm just going to keep looking and reading until I find something that may give me the types. Now that's the inventories on the balance sheet, and that's on my statement of cash flows. We are going to need this in a few minutes. This says, oh, here it is right here. Our inventory consists primarily of parts, batteries, accessories, and other products used on vehicles that have reasonably long shelf lives and is stated at the lower of cost or market. We're going to need to know that too. So I think what I'm going to do is I'm going to just do a screenshot of this paragraph on inventories. So let me bring up my clip, my snipping tool. And I'm going to say new. And I'm going to highlight this area right here. And I'm going to save it as inventory. I'm just going to put it on my desktop for now. And then I'm going to see that it's on page 41 of the PDF. So I'm going to minimize this, go back to here, to my chapter 5. And this is going to be my reference, my evidence. Whoops, sorry. Evidence. And then I'm going to have a reference. And the reference is page 42, 2020, 10K. All right, now my evidence is going to go here. And I'm going to go ahead and paste my inventory in. Now I have to make this a little bit bigger so that it fits. And I don't know how many, I'm going to just say I'm going to need at least that many. I'll make this bigger. I'm going to move that over here. Just try to make it neat. And then I'm going to move my reference over a little bit so I can see it all. Remember that I have a lot of these to grade, so the neater you can be and the more easily it is for me to find your answers, it's just better for all of us. Whoops. Let's go back. Okay. Then I'm going to take this. I'm going to delete it. I should have just deleted it in the first place. Clear all. Okay. So here's my inventory blurb, and I'm going to go ahead and take this row and stretch it down below my figure so that it fits real nice and neat right here. All right, so it asked me to describe the types of inventory held. And so what I'm going to do is say, I'll probably put it right here. The inventory consists primarily of parts, batteries, accessories, and other products used on vehicles. And then I'm going to go over here. I don't want to make that big because I may need some more space. I'll do it here and I'll wrap it. Okay, that looks good. All right, so now I'm looking at, does the company indicate its inventory management goals anywhere? So I'm going to continue to read this paragraph. And it says, we regularly review inventory quantities on hand, consider whether we have excess inventory based on our current approach for managing slower moving inventory and adjusting the carrying value necessary. So I'm going to say, yes, they have inventory management goals, and they are stated in the evidence above. Okay, and I'm going to wrap this text. Okay, so I've answered number 1. All right, so I'm going to go ahead and save. I'm going to go back to my project. So that is under this tab. I'm going to copy question 2. Command C. Go back. I'm going to go here. And again, it put it on 2 lines. So that's okay. So I'm going to go here and copy this. Or actually cut it and then paste it to the end of here. Oops. Yeah, that should be right. Yep. Okay, and then I'm going to word wrap it. All right, so the inventory costing method. So let's go here. If we look back up at our inventory, it says the cost of our merchandise is primarily determined using last in, first out. Under LIFO, our cost of sales reflects the cost of the most recently purchased inventory, while the inventory carrying balance represents the cost related to prices paid in 2020 and prior years. So they use LIFO. And what I should do is say see above paragraph, or see above evidence. And I'm going to do the same here. And I'll just put in, just in case we get too low on the page, in cell F3. So it's obviously where that is. Okay. All right. And then, do you think inventory costs are rising or falling? Well, we know that LIFO uses higher prices, lower inventory. So I'm going to say inventory costs are rising, especially due to the COVID pandemic and supply chain issues. So depending on your company, this answer may differ for you. I'm going to wrap the text. Okay, and I forgot to put a 2 here. All right, let's go back to our, let's see what's next on our list. All right, here we go. Command C. Now we had to search our 10K for all of these things. So just because I don't say it in each one doesn't mean you don't have to go to the 10K to find it. So again, I'm going to paste here. Again, I put it in 2, not sure why, 2 lines. So go to here again, make this right. Wasn't putting in my numbers correctly. Now it's not putting this in, but that's okay. We can fix it. Wrap text. Put a 3. Okay, now the cool thing is all of my stuff was in this one paragraph. So you can see right now that it stated at the lower of cost or market. So I can refer to that again. Now it does not say whether they wrote down any inventory during the year. So let's see if we can find that out. So let's go back to our 10K, and we're going to keep searching for inventories and see if we find anything. That's the cash flow statement, the balance sheet, vendor incentives. Oops, I'm going the wrong way. Let's go the other way. Vendor incentives, so that really doesn't have anything to do with lower cost or market. Cost of sales include product costs, warranty costs, vendor incentives, cash discounts or payables, costs associated. Impairment inventory resulting from store closures and costs. But it doesn't say whether they had any or not. So let's keep going. Here we go. Inventories. Oh, this actually really tells me some stuff. I like this. So they use LIFO for 88%, and they had a change in the LIFO reserve. And so 1 year it was increasing and decreasing. Okay. We don't need to get into those details. It still doesn't say whether they marked anything down. If they had to write any off. So let's keep going. I think, let's see, here it is. And these are deferred taxes. So you can see how inventories affects their taxes. Those are the deferred tax liabilities. All right, so they did not disclose that they wrote anything off. So I'm going to go over here and say no. After searching the 10K for the keyword inventories, I did not find where they had written down inventory during the year. Which kind of makes sense, because I would think with the increase in the cost of their inventory, unless they had unusable inventory, which for auto parts doesn't seem too likely. All right, so then I'm going to go back and wrap it. Okay, so now let's go back to our assignment. And number 4. And I'm going to go here and paste. Again, I know I'm going to have that issue. For whatever reason, it's doing that. Put it on 2 lines this time. All right, and this is number 4. And I'm going to word wrap it. Okay, so this one wants me to calculate the inventory turnover ratio and days to sell. And I'm going to need it for 2 years. So our inventory turnover ratio is cost of goods sold divided by average inventory. So I think what I'm going to do, let's see if I can make this look pretty neat. So I'm going to insert. Let's see how we're going to do this. I'll figure this out in a minute. Okay, so I have 2021 and 2019 because I have crazy stuff where you're going to get a cost of goods sold. Let's see if we save that name. We did not. Okay, so first thing we're going to have to do is go back to our income statement. Find cost of sales. Here it is for me. Okay, and I'm going to go ahead and name this one. Cost of goods sold 2021. And just to make it easier on myself, I'm going to copy it and paste, and then 2019. Okay, so I have my cost of goods sold, and now I'm going to need my average inventory. So I'm going to need my inventory for, remember, 3 years. So let's go to the balance sheet. And remember that they're only going to report inventories for 2 years. So we're going to go over here, and I'm going to put 2018. I have to go back to my 2019 sheet to get this number. Okay, so I'm going to go back. I have to get this when it's on my desktop. So my advanced auto parts right here for the prior year. Again, I'm going to do a find. Oh, don't tell me they don't have inventories. Because I hadn't typed it. Weird. Okay, well, we know they have inventories. So let's go down to the financial statements. There they are. It's my statement of operations. There's my balance sheet. There's my inventories. I don't know why it wasn't coming up. Okay, so I'm going to go ahead and just make a screenshot of this real quick. So again, I'm going to get my snipping tool. And I want to screenshot this one, my 2018, but I'm going to just go ahead and screenshot the whole thing right here. And then I'm going to save it. And I can't call it inventories 2018. Okay, now I'm going to go back to my spreadsheet, and over here I'm going to put evidence, and I'm going to go right here by inventories and insert the picture. So I can see it right here. And my reference, let's go back, was page 44 of the 10K. Now, I really actually prefer to not to copy and paste because it's so easy to make a mistake, but I'm going to go ahead and just put it in here. I'm just going to be very careful. 4362547. All right, there's my inventory for 2018. Now, I'm going to name these inventory 2021. Inventory 2019, and inventory 2018. All right, back to chapter 5. Now, let me move this up. I don't know. This one's a smaller font. Let's go ahead and raise that font. And I think it's a different, let's make it, I think it's Arial 12. For some reason, I don't know, it changed my font. Let's do it here. Average inventory 2021 and average inventory, whoops, 2020. And I'm probably gonna have to move those in a minute when I'm thinking about it. Sometimes you just have to figure out the best way to make things work. So I'm gonna need 2 years to calculate this in 2 years. So I'm gonna cut this and move it down here for now. And then I'm going to go here and I'm going to say my average is going to be inventory 2019, sorry, plus inventory of 2021. And then my average is the difference, right? So maybe let's go back. Let me just cut this and paste. And then cut this and paste. So let's do my first one. Equals inventory of 2021. Oops, put the wrong one. Let's go back. 2019. And then inventory of 2021. And then my average is the sum of the two divided, or I can just use the function the average, which is what I should do. So let's go up here where your sigma sign is, go down to average. It will automatically do your Hollywood lights. Make sure E24 and E25 is which one I average, that is, and I just press enter, and there it is. So now I'm going to name this average inventory 2021. Well, let's see, 21_19. There we go. That's much better. All right, then I need my inventory for 2018 and my inventory for 2019 to do my average for the prior year. So again, I'm just going to go equal to inventory for 2018 equal to inventory for 2019. And then again, go up and use my average, E28, E29, and there's my average. Go back here and I'm going to copy this name. And then I'm going to put 19_18. All right, perfect. Okay, now in order to compute my inventory turnover, I need the cost of goods sold. So I've already named those. So I've got cost of goods sold for 2021. And my cost of goods sold for 2019. And my average inventory, so I just say equal average, and I can start looking, and I want this one first. And then equal average, and I want this one next. And then I'm going to take this divided by this. So my turnover is 1.25. And 1.24. Okay, I just took a break in the middle of the video because once I calculated my turnover ratio, so this is my inventory turnover ratio, I got concerned. That's a very low inventory turnover ratio. So I went and double checked all my numbers and they're all correct. And I also went to ready ratios and looked it up, and that's about what they had too. So interestingly enough, they just have a very, very low turnover ratio. But always question your numbers. If they look funny, make sure that you haven't made an error or something is not wrong with your numbers. You should be looking at that. So I have formatted those numbers. I'm going to come over here and change my numbers here and put my commas in, take my decimals out. just so it looks nicer. Okay, so my inventory turnover ratio ended up being 1.25 and 1.24. Very interesting. You learn a lot by doing financial analysis of a company. Now we want days to sell. And remember, days to sell is going to be 365 divided by the inventory turnover ratio. Okay, so I'm just going to type E365 divided by the inventory turnover ratio. And you can see we have a days to sell of 291. Now we're not going to use any decimal places because partial days just doesn't make sense. And then we're going to go ahead and copy this formula over. And we get 294. And that's exactly what Ready Ratios had. So it's just very weird. I mean, that is a very long day. They carry a lot of inventory. Perhaps they need to because they're in auto parts and there's so many models of cars and so many parts. And in order to have things on hand for their customers and have their customers keep coming back, they just need to carry a lot of inventory. Anyway, okay, so we've got all that done. That was a long one. Let's go back and see what the next thing to do is. Go back to, and you can see I was on Ready Ratios. I'm going to go to 5. Oh, look at this. Well, we've got to go there anyway, so that's awesome. Okay, so number 5, we're going to go ahead and copy that over. Okay, so it says go to readyratios.com and locate the median inventory turnover days for the industry. All right, great. So let's go over here and go to Ready Ratios. And I happen to be, remember when you get on Ready Ratios, you want to go to Financial Analysis. It will ask you for your company. You put it in here. I put in AAP. And then I'm going to look for the inventory turnover ratio. They'd have it in days. And look what the median is for my industry, 69 and 79. So I'm going to use my snippet tool to take a screenshot. And screenshot my inventory turnover. The last 2 years. Save it. And I'm going to go back to my sheet. And I'm going to copy it over here as my evidence. I think this is my evidence. Yep, perfect. So insert picture. Okay, see if that fits pretty well. Well, pretty well. I can make it a little bit smaller. Don't make it too small. I need to be able to read it. Okay, so there is my evidence, and I got it. I'm going to go back to my website. And copy the URL as my reference, and my reference is in G. So there's my reference. And then I'm going to write my paragraph. So right here, I'm going to say advance auto parts days to sell is 291. And I'm going to put for 2021 and 294 for 2019 is much worse than the industry average, which was $69 for 2021, and go over here and see what it was. $79 for 2019. All right. I'm going to wrap text, and that one is done. Okay, let's go back to our assignment. And number 6 is record your stock price on the stock sheet and the group sheet. Okay, so we've got to go to Yahoo Finance. And remember, I'm going to search for AAP. Advanced Auto Parts. And I'm going to look for the close, which would be yesterday's close, 215.58. And that was yesterday, which would be 327. And now I can just copy down my formulas. It went up again, yay. And I'm only down like 5% now. Okay, so I did it there, 215.58. And now I have to go put it in the stock sheet for the class. So go over here. And again, I'm going to go home. And go to the financial statement analysis project. Go to the stock sheet. Uh-oh, somebody did some sorting on our sheet. I'll try to fix it. Okay, so here I am, and I want to go to my next chapter. Put in my stock amount. All right, so I've got that done. Okay, make sure you save your file. Make sure everything's in the correct order. Right? You should have all your financial statements, then stock, chapter 1, 2, 3, 4, and 5. And we are now done with another chapter. Congratulations.